Buenos dias, ladies and gentlemen. This is the next video for 5KP program for this week, 9th of March 2021. I'm broadcasting from Cuenca, Ecuador, so moved a little bit. And this program will be a little bit special because we will focus on two risk management techniques. I was asked specifically by Veronica to talk a little bit about rolling trades down on a small account, like 5K account. And also I will introduce something which is called protective call, right? So it can be a very interesting technique. When you see your stocks going down, you can actually protect yourself from the losses and do it quite efficiently with this technique. So I will introduce it to you before we go there. This video, remember, this is for informational and educational purposes only. So no financial advice given. Only education. So if you agree with this, we can move on. And today's agenda looks like this. So just to shortly summarize the markets from the last week, where I kind of ignored the markets a little bit because I was busy doing other things. But basically they were hit quite hard by some corrections and then recoveries, so getting very volatile. What I saw also on Twitters and when people were talking, traders talking, they were quite frustrated with prices of commodities moving up or down or being manipulated. For example, gold and silver community quite frustrated. Undervalued mining stocks, but they seem to recover today. This is very interesting because value as gold as an insurance is rising still as an insurance from inflation, and knowing that Fed adds 1.9 trillion of newly printed digits to the already printed digits, huge pool of printed digits, of course helps to increase the value of an insurance of gold. However, that has not been yet priced in by the market, the insurance value. FSM, and this is a trade which is hurting us a little bit. What did I do here? I promised to buy shares of FSM at 6 per share and at 7 per share. So I sold basically two contracts, three altogether, 2 at 7 and 1 at 6 puts, so cash secured puts, for which I collected, what is this, 35, 50, so 60 bucks, basically, not much. But okay, the shares are not also super expensive, so it's quite significant discount. Right now it's trading at 6.88, okay. So we're probably going to be assigned at this level 7 here. So with 50 bucks of a discount, so that's like 650, right? So it's pretty nice. It's would be really nice if we get assigned. Would be still winning. We would be in a winning position, acquiring shares at the discount. I want to roll this trade just to show you how I would escape this. If I didn't want these shares to be assigned to me, what could I do? I have 10 days until expiry. So if I want to get rid of this loss and I'm not interested in collecting these shares, what could I do? And this is the technique which I'm going to show you here for getting out of trouble from here. Is called rolling down and out. Rolling down meaning I'm going to reduce the value of the strike price here from 7 to 650 or 6, depending what FSM is offering in the option chain, and go out in time, meaning not 10 days, but probably I would go to 40 to collect more time value. So as you can see, for the value of this today is negative 45 bucks, right? My plan was actually to stay in this and collect these shares, so I'm not gonna change that plan, but I'm gonna show you how I could get out by rolling it down and out. So let's go to Analyze tab. But I'm going to load FSM. I'm not looking at FSM, and the problem I'm having here is with level 7 puts. So at strike 7, you see we are in this loss here right now, 45 bucks around. Still, we're above break-even point. So if we let this contract to expire, we'll be making money. That's why I don't want to get out. But let's say you don't want to be assigned, and you will be as long as you're below $7 per share. So this contract is hurting us. So what I would like to do here in order to handle this and not be assigned, simply roll this out, down and out. How can I do that? So I will go to the monitor page, select my contract and say right click and say create rolling order, and it says to me sell -2 calendar FSMs, and then it proposes some strike level so of the puts, and it's the same. But I'm not interested in having the same. It just rolled it out in time till 16th of April, but I want to also reduce the level of strike price, and can go only by 1 point down, so to level of 6. And you can immediately see that I will have a certain loss on this trade. Okay, and that loss would be instead of 25 or something, 20 cents per share. So how would I look like on the risk profile chart? So analyze this. Basically that's what it shows me. I would still end up with the loss, but if I go further than 10 days away from 19 March, above 19th of March, let's say 25th, I see that I eventually end up with a win of $10 on this trade, just making $10, so recovering from the 45, or basically 45 that I'm losing today. I would just make up correction of the price.